You know, when we think about day trading, all we think about is winning, right? We think about how much money we're going to make. But I'm telling you guys right now, one of the biggest aspects of day trading is losing. That's the biggest secret. I would say that the best traders in the world are the best at losing. And that might sound totally ass backwards to everything that you've ever heard about day trading and the idea of getting rich. But I'm telling you right now, losing as a day trader is the hardest thing to do. We're going to talk about that right here in this video, the emotions around losing and the idea that you need to be able to accept that you're going to lose. You're going to lose. It's just part of it. Well, what's going on, guys? Patrick here. Today we're talking about losing. Something that a lot of people on YouTube, a lot of people in general don't want to talk about because it's this taboo thing. Like, oh, you're losing? You lost money? Oh, that must mean you're a bad day trader. Must mean that you don't know what you're doing. But I'm telling you guys right now, the number one skill that you can have as a day trader is being able to lose. We've talked about this before, but I wanted to talk about it again because I think, like, I'm going through that right now. Like, I'm going through that process where I'm like, am I okay with losing? Am I okay with cutting off a loser? Am I okay accepting that? Why is it that we take profit early, but we hold on to our losers? Like, that's one of the worst things that you could do as a day trader. Because number one, if you're going to enter a trade and you have your risk to reward and you end up taking profit early on every trade that you take profit early on, you're going to end up losing money. Even if you're taking profit early, you know, over and over and over, the losers that you have based on your risk to reward are going to end up eclipsing your winners. And you're going to lose, right? Like, you're going to have days where it's just not going to work. You're going to, like, have your setups. You're going to have everything kind of planned out. It's all going to look gravy. It's all going to look perfect. And you're going to end up just losing money. It's like literally just a thing that is part of day trading. And a lot of people don't talk about it because they don't want to talk about it. They want to talk about, like, hey, this is how you get rich. Hey, this is how you win, right? Like, it's always just about how to win. It's never about how to lose. And I think that's something that really needs to be talked about. And it really needs to be the focus for so many people. Big person in believing that, like, every day I'm going to wake up and I'm going to win. But sometimes losing is actually winning, if that makes sense. Because the way that this works is basically, if I enter a trade and, you know, I have my risk to reward, I have my stop loss, and the trade doesn't work out, it goes against me, I have to be okay with taking a loss. I can't move my stop. I don't want to go on tilt because I just lost a trade. And what happens is, I mean, you guys have seen it. You've seen it live on YouTube. And obviously, just because I'm making this video does not mean that I'm an expert. Like, this is something that I'm battling. I'm going through it. That's why we're talking about it right now. But, you know, if I exit a trade for a loss, like, what is my reaction afterwards? Like, how do I feel after that? Do I feel like I want a revenge trade? Do I feel like, okay, I'm going to short because I lost? Or do I step back and look at the trade like, hey, like, the reason I got stopped out was this happened. You know, this is the reason that I ended up getting stopped out. Or, I mean, you guys have seen it. Like, again, like, this is something that's I've done. I mean, I still do it. I end up getting stopped out, and then I'm like, screw it. I'm going to get short now. And then guess what? The minute that you get short, it ends up spiking back up. And it's just part of it, right? Like, that's the one amazing thing about futures is you can literally go long, lose money. You can go short and lose money. If I lost money going long, then I just go short. But it's just not that simple, right? It's not that easy. Because the markets can kind of just chop around. They can do things where, you know, you get stopped out and it pushes right back up to where you got in at. So, like, for an example here, let's say I'm buying down here at the 48s, 47s. My target going into this trade is, like, I'm going to risk, you know, basically, let's just say I'm going to risk basically like where I'm buying at. I see there's kind of a double bottom. You can see there's like a little bit of double bottom there at the 45s. I get in here at the 48s, and my target is to push above that previous high, 64. So I buy at the 48s, and I end up taking profit early. I take a profit at the 56. Yeah, like, cool. I made profit, right? I made the profit. But the problem is, if I'm going to risk $500 on that trade, well, I better make $1,000, right? Like, I better make $1,000 on that trade. Because me taking profit early is messing up my overall risk to reward. Let's say I get long here at the 70s. I'm like, okay, we're going to push to 80. And then I end up getting stopped out for a $500 loss. Well, that winner that I had earlier barely covered that loss. So I need to make sure whatever my risk to reward is, if I'm going to risk 500 on a trade, Well, I need to make sure I'm making, 1,000. And, that's really the big issue with taking profit early. Basically you get into a trade, you have your target, like you need that target to get hit. I mean, I think there's okay to to be realistic, but to enter a trade with a $500 risk and then take profit for $200, you're really, you're messing up that whole entire risk to reward, because at the end of the day, let's say you do that trade 10 times. And let's say you make $200 on 3 out of those 10 trades, but then you lose $500 on 3 out of those 10 trades. So now you've got basically $1,500 in losses, and you've only got $600 in profit on those 6 trades. And then luckily you end up, getting some trades later and you make that profit. But if I'm going to take 10 trades and I'm going to risk $500 on each of those trades, well, I need to make sure that my one winner is going to cover 2 or 3 losses, at least 2 losses. Let's say my win-loss ratio is 70%. I need to make sure that my winners are covering my losses. Because if I'm entering a trade and I'm taking profit too early on all these trades, one trade goes against me, I can guarantee that I'm not going to take a loss early. Like, I'm not going to get out early, right? How many times do you do that? Like, how many times do you get out early of a loss? Or how many times do you hold on to it? Like, that's a really good question. Like, how often do you cut off a loss early? I would say probably not very often. I'd say probably more often you end up holding for that stop loss. But how many times do you hold your winner for that profit target, right? Like, that's the big battle here, is understanding that, if you get out early for your profit target, you're now skewing, that risk to reward. I think it's okay to enter a trade and move your stop to break even. That's, kind of okay. But again, you're still, you're messing with the overall percentages. Because if okay, my overall win-loss ratio is 70%. 70% of the time I'm right. Well, those 30% of those losing trades can still eclipse any of your winners. Profit every time early, but every time you hold on to a loser, you take the full loss. That 30% of that win-loss ratio is not going to work out, and you're going to end up being in the red. And I definitely think that's something that I need to work on. Like, I really need to make sure that if I'm going to be entering a trade, if I'm going to risk $500, I need to make sure I'm making double, maybe triple. And I really think that's a part of the emotion of being able to accept that you're going to lose sometimes. Profit early, it might seem like, oh, that's a good idea. But really, when you think about it, is that also the fear of losing? I think that's what it is. That's the fear of losing, right? You're fearful that you're going to lose, so you end up taking profit early. Even though the trade is working out, it's going in your favor, it's going up. You end up taking profit early because you're fearful that you're going to lose. Instead of knowing hey, look, 70% of the time I win. So I need to make sure that if I'm entering a trade that I have realistic targets, right? That's my overall kind of idea here is I need to accept that losing is a part of the game. I need to accept that if I'm going to risk a certain amount of money, that it's part of it, right? I'm okay with that. I'm going to risk it because I know that I have a target that's going to make me a certain amount of money. And again, that all goes back to the fear of losing, being afraid of losing or just not being able to accept that it's part of it. You're going to have trades that you're going to lose. And you need to understand that you're going to pay for those losers with your winners. So if you end up taking profit early on every single trade, you're not going to pay for those losers, and you're going to end up in the red. And I'm sure a lot of people watching this video are probably dealing with that same exact emotion. So it all goes back to the first idea here, is being okay with losing, accepting, hey, look, I'm in the trade, I got my target, I might lose here, I might totally lose, but I can't take profit early just because I'm afraid I'm going to lose, right? Because I shouldn't have that fear, because I know, okay, my win-loss ratio is 70%. I can take a trade over and over and over. And as long as I keep hitting my targets, my 3-to-1 targets, my 2-to-1 targets with the 70% win-loss ratio, I know that I can make money. I know that I can make money if I just hold on to my winners. And how many times have I've done it, where you end up taking profit early and the market goes to the moon. How many times does that happen? It happens over and over and over. And we ask ourselves, why does this always happen? Because we're afraid of losing. We're afraid of accepting that we might lose on that trade. And it's easy to take profit quickly because you're oh, I'm just gonna take profit. I don't want to lose. I don't want to lose. That should never be like an idea, like, right? That should never be an emotion here. Like, that should never be an emotion where you're like, I'm afraid that I'm going to lose. Something to think about. Something to think about, my friends. We're going to really kind of focus on that the next couple weeks and really try to hone in the idea like, hey, look, like, we're in it. We're in this trade. We're going to see what happens. We're going to hold it. We're going to look for our target. Once we hit our target, then we can start to think about taking profit. But until then, if I'm not going to take my losers off quicker, then I definitely shouldn't be taking my winners off quicker. I think that's like a really, really good way to look at it. Like, just honestly, like a really good way to think about it.